Hello everyone, this is Drew from Best of Us Investors. I'm sure that if you have been a subscriber of Best of Us Investors for some time, you know that we have a platinum service where we not only share Kerry's portfolio, but also share Mark's swing trading platform as well. Now, Mark has been investing for over 40 years now and has worked as the director of operation for an online firm for around 10 years. Today we will be looking at some trades and also have a discussion that we think would make sense to everyone watching this video. I hope you find this video helpful and learn the important indicators that would boost your gains and at the same time protect you from great losses regarding swing trades. We have also started a Zoom meeting with Platinum members to address any questions and share ideas so that we could help each other to invest successfully. Now, if you may be interested in this service, please make sure you check the link in the description and join our Platinum service so that we could get through this tough market together with great outcomes.
So this is Adobe, and we got into Adobe. This is our cost basis line right here. We got in right about back here, right when we got above the 200-day simple moving average. You can see we've crossed up and we've really spiked up. And at some point, what I like to do is, because this is an expensive stock, it's $380 some. If you have a 100 share lot and you go quite a ways from 363 to 380, that's quite a bit. So I got up in this area and I'm like saying, we've got a lot of resistance right along this line. So I think right in this area, we put in a stop and it stopped right here. And we sold 50% of our position right here at 383.92. And then you can see the next day we closed down. And then the next day we closed down again. And during this part, I put in a stop right under the 9-day simple moving average, which is this pinkish line. We sold another quarter position at 377. You can see today we have a quarter position left and we're below the 9 days. So we'll be getting out of this. Went down and just touched on the 20. I'm trying to get it to go back up. Hopefully we'll have a little surge at the end of the market today and I can get it a little higher, but it doesn't look like this is going to close. We're going to close out this position with our final quarter. We'll be above our cost basis here. And so this will be a successful trade broken into 3 cells. So worked out pretty well. But once you go under this 9-day, you're pretty much done. You can see down here, cross over the MACD, cross over the slow stochastic, and we're seeing the RSI go down. Time to get out. So that's what we're doing.
Mark, my mind looks at that and says, what caused that turn on Adobe? But again, you don't even consider that.
No, I just watch the charts.
You just watch the chart.
Sometimes that's why we always want to know, Kerry, when earnings are or dividends.
Yeah.
So I always get out before earnings because you never know what's going to happen. And if you look at a lot of charts, they dump a lot of earnings. So that's the devil I know, that we're going to have earnings. The key here, Kerry, is this 9-day simple moving average. We're going to close below that, it looks like.
And that would be a signal to get out.
Yep. But we're already 3/4 of the way out up here and here.
Yeah, I understand that. All right.
I'm not going to let it get past this 20-day because that's acting as resistance right now. You can see it bumping off. Just like this line up here was acting as resistance. Yeah. I mean, this is support, not resistance. There's a stop sitting right there. And if it goes down there any further, it's going to hit and we'll be out of this. And we'll be above. So we'll make money on this trade here. We've been in it about 10 days.
Okay.
That's a longer term. Yeah. Now, what will kill you if you're in these things that you don't know, or like some analyst will come out and do a downgrade and it dumps. There's no way you know that's coming. You know, in the morning I set things and I'm not here all day to do it. Yeah. So it just kind of runs itself.
Yeah.
So if we go.
And I admire that you take a fourth out, take another fourth out. And as you always say, walk away with some profit.
Right. Once you get ahead in the game, you can play defensive.
Yeah.
Hey, Mark, I'm curious to your thought when you saw, was it this a daily, the big, it's a dojo?
Here?
Yeah. Yes. The big move there and then the close down from its intraday high. What is your thought when you see stuff like that? Is that, what's that tell you?
This tells me there's indecision in this particular stock because, we opened here and we closed here. It's very skinny. But we had a run up here, but the bears took on and beat it right back, and then we had a little bit of a dip, and that got beat back up, and so there's really indecision in that candle right there. Normally, I'm not a huge candle reader, but look at this gap that's here too. You knew that was going to get filled, and it dropped down. And we never really had a candle fill it. We just dropped back down, but it was so far above all my indicators, I just let it go this time. Sometimes, just for kicks and giggles, I'll put a sell out. Let's just say we're here on this candle up here. and just see if something like that happens and hits it. If it does, I'm good with that.
Oh, okay. So you're putting a limit order above,
Yep.
like intraday or a daily. I take it just a day order.
Yep. Day
Okay.
order.
To see if
Yeah,
you can get it.
I don't want to do it right at market open is not a good thing to put an order in before market open. You know that.
Right.
So this is the S&P 500, and the way that I use the S&P 500 is if you were going to be just an index fund buyer, you would have bought right about here when we cross the 200-day, and you'd still be in it. Or you get out when it crosses on the negative side. But this just kind of gives me an idea of where the market's going in general. And you can see, since we broke out of this sideways pattern, and that was on the 6th of January, we've been, just crushing it. This was a long-term trend line right here, negative bearish trend line. I mean, it goes back to January. You can see where the chart hits it. Hits it, and you can see these patterns too. Here's a pattern. Here's a pattern. Here we had a double top. Okay, we predicted it would go down to here, which it did go down to there just by analysis. But what's interesting here is this orange line represents once we broke through. We got above the 500-day or 200-day simple moving average. We just kept riding the 9-day up. Look how it just uses it as support. We had hit the 4,100 point once, and then we broke through it last week. And then we came back down and we started to use the 9 here as a little bit of support. And this is a big resistance line that now turned into support. But look what happened yesterday. We broke below it, and today we're trading below it. We're trying to get back up. But if we don't get above that, you can see the next line of resistance or support is the 20. And we could see this market, if we can't get back to this level, we could see it come back a little bit. Might retrace, but we could see a dump here. Look at down here. Look at the cross of the MACD right here. Okay, you can see even our histograms are going down. Here's a cross of the slow stochastic, and then we're at about 55 on the RSI, coming down from about 64. So this isn't telling me too good of news right now, just on the market in general. And if we get back down here, and right here is this bearish trend line, and you can see the 50s crossing that. We're not too much further from the 200. We get down in that level again, it'll be interesting times in the market. So this is an interesting day to see if we can maintain this 4,100 level up here, but it doesn't look like it right now, with the market still being open while we film this.
Yeah, I think it's interesting. It's roughly 7 days ago we hit that peak, and ever since it's sort of, you're seeing a exit from a money flow into SPX or SPY is starting to wane, and you're definitely seeing that in. I look at the options market, and the action today is very heavily tilted towards the downside or the put side of things. So I'm curious, your trend line, the white trend line there, that I'm thinking is that's probably potentially could be the next or support level, and then it's a question of what would drive it to move higher or move lower, and that's where I sort of span out into the bigger macro element of it all.
What I think it's going to be is the CPI and the PPI next week is going to determine it.
Yeah, I think it's it's interesting. I was thinking today about what really will drive the Fed to loosen up on rates, and it really comes down to employment. When we start to see that unemployment number actually start to tick up from its, I think we're like a 54-year low in unemployment, there is no reason for the Fed not to raise rates, which still pushes so much pressure on markets to go down because the liquidity is shrinking. And I think you're starting, this move this year so far is that everything that's moved strong, like the S&P, the Qs, the Apples, the Teslas, and all these, it's that they got slaughtered last year. And so you're having that dogs of the Dow kind of thing where you sell the strength or you sell the stuff that did well that year and you buy the stuff that did poorly. And I think that's what we're seeing here. But I'm curious to see where that in your chart there, where the S&P comes down to that support level, and will we have enough positive data that would keep it up? And if not, where does this thing go from here?
I mean, the only positive data that I personally see is the jobs report, but that's actually negative data,
right.
So it's a catch-22. And, the great conflict that I'm watching is this battle between the Fed and the market. The Fed says we're going to do this, and they have been doing it. They haven't switched. And the market says, no, you're not. You're going to stop and you're going to reverse. And you don't fight the Fed. I'm betting on the Fed on this one. I watched, Powell came out and, he said a couple things about we're seeing deflation. We're seeing the deflationary process begin. And that's all I think that those who want the market to go up here. I got done listening to Powell going, all I heard him say is, look, I don't think we're done, and we're probably going to have to do another one because of the jobs, and it's going to last longer, and we're going to hit 5.1 to 5.4%. And then I hear three more Fed guys come out this week, and they're talking about, this is going to go on for a while, and we could hit above 5.5%.
Thank you very much for watching this video, and if you would be interested in more details and updates regarding swing trades and chart analysis every day, along with Zoom calls for Q&As, make sure you join our Platinum group and let's successfully invest and make through this tough market together. Thank you.